I do not pray for success. I ask for faithfulness. Mother Teresa. That is what it takes, my friends. It takes faithfulness. You have to spend 10 to 15 minutes every day following these markets, giving yourself the time, the knowledge, the sophistication you need to be able to figure out how this works, because it is all based on your experience, your prior experience, your ongoing on-the-job training to be able to figure this stuff out and make it work. The lessons we teach here every day are invaluable. We have one for you today, a favorite one of mine, Secrets of Profit and Loss Bands, so you understand when things go your way, how to make sure that you get out at profitable levels, and of course, how to cut your losses in minimum time in a way that's visual so that you don't sustain losses that will kill you. Remember, in the markets, you are killed by losses, never by profits. But knowing those areas of profit and loss when you go into a trade or investment is so critically important. Now, we see the market swinging up a little bit for the day. We see the S&P 500, the NASDAQ 100, and gold up, bonds down. Again, look at our chart, my friends. If you think this is over, if you think, well, you're falling into the bull trap, aren't you? We've talked about that. If you haven't taken that special training on Corona investing, go to the website, check it out. Please make sure that you listen to that. Also want you to have the special training today if you're not already signed up. It only goes out in emails to our members. It's for free. We don't charge for any of this stuff here, and we're here to help you, particularly during this really, really critical, tough time, a great time for you to train, for you to practice trade, for you to understand how to deal with this volatility and these crazy markets we live in. These charts keep telling you what is going on, what investor sentiment is. We want you to be with us every day as we follow these markets. And folks, would you do me a favor? Would you put in the YouTube show notes or email us cw@chartingwealth.com additional trainings that you need, that you would like to have? I will be happy to work hard in all of this to make sure you get the trainings you need. I want to do that for you guys while we're going through these critical times, and so many people are getting so hammered, don't know what to do. You need to learn from this. Learn from it. We'll help you learn from it. Now, let's talk about what's going on. The S&P 500 up 5.63%, NASDAQ 100 up 7.58%. Let's go first to the S&P 500. Big red down candle, not much of a wick on the bottom, plumbing lower lows on both the candle and the wick. Remember, the wick shows us either the top of the top or the low of the low. We see that price percent oscillator heading down, derivative oscillator still gaining downward momentum. What does this tell us? Market is decidedly down. Okay, decidedly down. So pay close attention as we keep pushing through this week. Two-day chart. It's lost some of its downward momentum. This is just the first day of the latest two-day candle. And look, you can see the bottom the same over the last 2 days. So that's a good sign on our medium-term chart. If you were wondering as to when all of this devastation is going to slow down, it has slowed down a little bit. First day of this latest two-day candle, based upon what primarily? Based upon this 4-hour chart, we can see sort of an intermediate maybe place of some kind of support right there at about the 245, 246 mark. It's just sort of hit there. It's also hit lower around the 240 mark. And then we see the down movement in the morning as far as our Heikin-Ashi candlestick goes, and up in the afternoon. Derivative oscillator has been gaining upward momentum the last 2 full days. Price percent oscillator heading up, but hasn't crossed over going up. Have no idea what tomorrow is going to be. I can tell you, though, the pattern we have seen after we had the weekly vertical crossover, it went up, if you recall, slid sideways, dropped, stabilized, dropped, maybe stabilizing for another drop. So we'll see. Maybe there's going to be enough government action and other things going on is going to make the market feel good, and it's going to cross over going up on the 4-hour chart. I would love to see that. Why would I love to see that? Because it gives us a reset and a chance to jump back into some of these down moves. Remember, we had that rotation over going down on the 4-hour chart back on Monday morning, jumping in point Monday afternoon somewhere around the 279 mark, something like that, 278, 279. And then what's it plumbed down to? Oh, my friends, down to a low of 237. Is that a great deal of loss? It is. If you were playing something like SH, that is the ProShares inverse. You could practice trade that. And again, we're not a stock calling service. We're not giving you any advice about anything you need to do or should do in any way. What we are talking about is, again, practice trading. What we see happen, that same time period, you would have jumped in somewhere around around 27, we'll say 28, and of course reached a high of $31.05. That's pretty nice over just these few days of movement. So again, pay attention. Let's see what there is to see, what there is to learn. We will continue to monitor these charts. But again, an up day for the S&P. Overall mood of the market decidedly down. Look for the opportunity to jump into a down trade when it presents itself, with possibly a practice put on the S&P 500 or SH, which is the inverse fund. Now, let's go to the NASDAQ 100. It was up even more today, 7.58%. But look at those down candles. That price percent oscillator spiking down, derivative oscillator gaining downward momentum, lower lows on both the candle body and the candlestick. So hammer down. 2-day chart, again, we see it, sort of finding a little resting point. This is just for a day, 3 days now, okay, where it's sort of plumbed about the same line. Price percent oscillator is not moving down at the same angle, still a strong angle. Derivative oscillator has, for the first time in many days, lost a little bit of momentum. Now, it's just the first day of the latest 2-day candle. It hadn't been fully drawn yet. We don't call it till it draws. What do we see in the morning? We see a solid green up, which of course is a slowdown in the go down, and then up in the afternoon. Look at the S&P or the Qs, similar to the S&P, how after the weekly vertical crossover, it went up, slid sideways, dropped, leveled, dropped, leveled, dropped. So are we leveling for another drop? We'll wait and see. Mood of the market in the NASDAQ 100, of course, still down. And folks, don't forget, we're talking about a bull trap. If this market moves up for a while, it's setting you up for a bull trap. The mood of the market is still down. Everybody's out of work. The country is economically crippled. It's like we've had a nuclear exchange. It is terrible what is going on. It is going to affect us for years to come. It is very, very scary if you look at it in those terms of not knowing if you don't know what to do. If you do know what to do, you know exactly to follow these charts. Let them lead you. Pay attention. Watch them. Learn. It's going to be worth your time. Okay, now we're going to leave stocks, go back to the weekly, go to bonds. Bonds down for the day. Now again, this candle body is weird. What do we have? We've had several weeks of run-up since we had that weekly vertical crossover. After the strongest week bonds have seen, maybe forever, I don't know, for a long time. Back on the week ending Friday the 13th of March, we now have a red spinning top, solid red, which means indecision, tending down, sitting right there on the weekly trend line. Price percent oscillator heading down, still positive. Derivative oscillator losing momentum going into the third week. Go to the 2-day chart. Look what it's done. It's passed through our old 2-day trend line. Not the best of lines, but we do see the price percent oscillator spiking over. Derivative oscillator's gone negative. So pay attention to that. Could have a bounce off. That does happen. Could get right there at the red signal line, and then all of a sudden stocks crash again. Bonds pop up. might give you an opportunity to play a bounce off, what we would many times look at as a 2-day recross. We'll pay attention to that. Just the first day of this latest 2-day candle, that's subject to change before it finishes drawing at the end of the day on Wednesday. And look at, we had 3 up candles on the 4-hour chart, and then the end of the day, the way it rolled over going down, looked like we were hoping, of course, for a crossover going up so that we might jump into bonds. Didn't happen. Derivative oscillator, however, is still losing downward momentum, but that price percent oscillator spiking down. So we got nothing yet in bonds. If things are crazy on Wednesday, Thursday, or Friday, and the market really starts to accelerate into a crash again, you may have an opportunity to jump into an up practice trade on bonds. Put that in your notes, in your trader worksheet notes. Now, let's leave bonds, and lastly, go to gold. Gold up 1.36%. What difference does that make in the gold weekly chart? Very little, my friends. That is a nasty down candle. Remember, we had that weekly vertical crossover in gold back on this last Friday the 13th. Derivative oscillator gaining downward momentum. Price percent oscillator spiking down. We go to the 2-day chart. That's still a bad-looking chart too, friends. Still heading down strongly. The only upside is check out the low that's been plumbed on the 2-day chart representing Friday and Monday. That's from the 16th of March, and this latest one just representing Tuesday. We haven't hit the lower low that we saw there. So that's a bit of a good sign, but not really reflected in our indicators, which is what we rely on. We use everything, but that indicator problem is substantial. And then we go to the 4-hour chart. Where are we there? Well, it surely hasn't crossed over going up, still going down, even after a day and a half of some up movement, really more like a full day of up movement. Derivative oscillator, that's our leading indicator, losing downward momentum. Price percent oscillator, our lagging indicator, flattening. So again, what's gold up to? Maybe it's just taking a break from losing and getting ready to move back over. We'll watch gold. We'll pay close attention to gold. But remember, your overall mood on gold with that weekly chart and the 2-day chart is decidedly down. So folks, that's where we are as we end the day on Tuesday, go into Wednesday, the 18th of March. I love to hear from you. Please let me know what kind of trainings we can continue to produce to help you. Do not panic. Pay attention to these charts. They work. I want you to practice trade as many of these things as you can. You can use these charts with stocks too, but they have to be trackable. They have to be chartable. And again, we have teachings on that. In fact, I think I'll put that teaching out again to you very soon. Also probably going to reintroduce all of our options training, those 3 important videos. So if you want to get any of this information, it's all put out for free, but you do have to go to our website, chartingwealth.com, sign up for our daily reviews and our once a week review and forecast. And guess what you get with that? You get the daily trainings for free. Everything's for free every day. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters. Keep the faith.